Hello, lovely people out there. I'm Kate Hill, and welcome to a special monthly city update, this time Brisbane. Now, you do know that I'm giving you the best commentary and content on our channel here. So before I do anything else, as always, please let me beg you to subscribe to our channel, hit the notification bell as well, so that you're getting all our expert hints and tips around buying, owning, and investing in property as soon as I post them. And if you are enjoying all of this lovely free content, you're finding it useful, which I hope you are, please click on the all-important like button as well. I do really appreciate that support because it means YouTube will recommend all my videos to everybody else. Now, why am I here talking to you about property buying, owning, and investing? Well, I am a property professional. As always, don't hate me. I've been in real estate for a really long time. I love it, actually. I've been advising and helping people forever. I've seen it all happen. I've gone through cycles. Most importantly, I own and invest in property myself. And I am out there every day at that property coalface. I've bought 3 properties for people this week. And I really, really care about empowering all of you to get the best outcomes for yourselves. So please stay tuned. It is only a few minutes. And if it means you don't get ripped off because you've watched one of these videos and you're a bit more clued up, then you have got nothing to lose. You can also watch one of my other videos here, and I've listed it in the description below, where you can learn about rent guarantees and whether I think they are worth it or not. Okay, so Brisbane. Now, if you have watched my last Brisbane property update, then you might remember how under control COVID was in Queensland in general. Most of the population was able to return to work really quite quickly. Local consumer sentiment was really strong, and Brisbane's property market overall had been very solid throughout the pandemic period. It had risen by 0.5% overall up to September. And in that September quarter, Brisbane's market was still holding really, really steady. There was neither a loss nor a gain. And there had been about a 3.8% gain on this time last year. The city's combined vacancy rate was at around 2%, and Brisbane's prices were predicted to surge by 20% by a number of different sources. Now, as at November 30th, the Westpac Bank also recently updated its property forecast for Brisbane, with prices tipped to still be growing at 20% between 2022 and 2023, meaning that Brisbane is likely to be one of the best performing property markets over the next few years. Now, of course, while some locations in Brisbane have very strong growth potential, and the right property in these locations will make really, really good long-term investments, certain sub-markets and markets within markets you should avoid like the plague. Now, over the month of November, dwelling values increased by 0.6%. Over the quarter, 1.5%, and the year-on-year increase sits at 3.2%. There has been no decline in most growth suburbs of Brisbane. Now, when I say a growth suburb, I mean the suburbs that I would be buying in, not the high-risk danger zones. The median vacancy rate across the metro area is holding steady at 2%. But keep in mind that this is much lower in these growth areas and much higher in the inner city danger zone. There are markets within markets. Now, the stock or inventory levels remain very low, and this favours sellers over buyers. It's all about supply and demand, right? The number of properties advertised for sale remains 20% lower than this time last year and 24% below the 5-year average. Total listing numbers are low, despite the sharp rise in fresh stock being added to the market. The spring period actually saw a 42% rise in the number of new listings added to the market, while the total number of listings held firm at minus 0.6%. And this reflects a really strong rate of absorption because prospective buyers continue to outnumber newly advertised supply additions. Weekly rental listings also remain low, meaning a tight rental market and growing rental yields. Now, in Terry Ryder's most recent Queensland report, the analysis of sales activity across the Brisbane metropolitan area identified 56 suburbs with rising sales momentum, which is the highest number since late 2015. The numbers show an all-round improvement in the Brisbane market, with a sharp reduction in the number of declining suburbs and a reduction also in the number of danger markets. Brisbane's affordability relative to the biggest cities is helping to boost its market, with more people relocating to southeast Queensland from Sydney and other parts of Australia. I think what's really interesting is also that of those 56 suburbs with rising sales activity, 12 of them are in Brisbane's North Precinct of the Brisbane City Council area, and 13 of them are in the neighbouring Moreton Bay region. Now, both of these precincts also have a very high number of suburbs with consistent sales activity across multiple successive quarters, which is remarkable given the negative pressure this year of obviously the COVID-19 pandemic. There's also been a notable revival in the Logan City area in the south of Brisbane, traditionally an area that attracts buyers seeking cheap real estate, good yields, and good infrastructure. The Logan City markets have been in the doldrums a bit in recent years, not really doing all that much. And there are now 9 suburbs with rising sales momentum. It's really a time when first home buyers are very, very active, and other buyers are also seeking an affordable lifestyle. COVID has forced so many of us to take a really cold, hard look at what's important in life and what our priorities are. So it's perhaps not surprising that areas like Logan City would show signs of an uplift. So moving ahead, facts that I think are relevant to future price growth potential are: Brisbane's population is growing faster than the 10-year average at about 23,000 new residents per year. And this is really only set to increase as more and more people migrate to southeast Queensland from interstate for better lifestyle opportunities and that affordable housing. BIS Oxford Economics are still saying that Brisbane property prices could surge as much as 20% over the next 3 years, as economic growth and affordability become factors that slow down Sydney and Melbourne. Brisbane is Queensland's economic engine room. It's a growth city with a strong history of economic performance, and significant infrastructure investment is coming. All the economic key pointers are heading in that right direction. Brisbane's economy is being underpinned by some major projects like Queen's Wharf, HS Wharf, Trade Coast, Cross River Rail, the second airport runway, and the Adani coal mine. Obviously not maybe in Brisbane itself, but it's there. But jobs growth from these probably won't kick off for a few more years yet. Now, our buyer warning for Brisbane continues for the inner city and CBD suburbs. We have said this before. The vacancy risk is still very high there, and where there are a large number of higher density units. Rents in the unit market in Brisbane have seen price falls, not as steep as Melbourne and Sydney, but nevertheless downward trending because there are similar factors affecting these property markets as we have reported for Sydney and Melbourne. There have been large increases in the supply of investment apartments over the last few years in Brisbane. There's been a significant number of brand new apartments being built. Now you add to that all those short-term Airbnbs, I'm saying it again, that have recently transitioned to those longer-term rentals due to the restrictions on travel because of COVID-19. So while the supply of those rentals has surged, we've also seen a big decline in the demand for the properties. We all know international and state border closures did weaken apartment demand for short-term travellers, as well as international students in Brisbane. Now that, of course, will be easing as those borders are opening. The same as around the world, industry sectors such as the hospitality, the arts and recreational services have all been hit the hardest by job losses and reduced working hours. Now, these types of workers are more likely to rent inner city apartments, and this has also negatively impacted on, obviously, the demand for these properties in Brisbane. So I'm issuing that warning specifically for property investors for these areas. As always, please be careful when considering these markets. The housing risks associated with less fiscal support and the expiry of mortgage repayment deferrals has definitely lessened in recent months. Job numbers continue to improve throughout October and November, despite the wind back of JobKeeper and the large majority of mortgage repayment deferrals. They have already moved back into a repayment schedule. The recovery trend is being led by owner-occupiers, while investor participation at the moment still staying at record lows. Now, with prospects for capital gain becoming firmer and more rental dwellings showing signs for potential positive cash flow, our really low interest rates are obviously helping with this, it's likely that investor numbers will become more substantial in 2021. Historically, we have seen investor demand mostly concentrated within our larger capital cities, but with the lower price points, higher yields, and arguably better prospects for capital gains, these smaller capitals like Brisbane are definitely set to attract more investment attention in 2021. So remember, the best places to invest have impact from infrastructure in two key ways. Really good existing infrastructure, so public transport, schools, medical services, retail outlets, and spending on new infrastructure. New infrastructure is particularly influential on generating growth in residential property markets. So with the federal budget that was designed to generate an infrastructure-led economic recovery, billions of dollars are being spent on transport infrastructure in southeast Queensland. Have a look at my last Brisbane video here, where I have listed some of those projects to come. And always remember, different areas are doing different things at different times for different reasons. Australia has many property markets. So I will keep you updated on all the comings and goings of the Brisbane and Queensland property markets very soon. Please don't forget to just subscribe to the channel, leave a comment below, hit that like button. I really do appreciate that. And I will see you again really soon. Bye.